So I want to go over where AMC Stock as well as GME can go after GME's earnings. GME earnings are going to be a massive catalyst for both of these names, and you really need to be caught up to speed with what is going on if you wanted to trade these names. And I do think there's a lot of potential there with some of the trades for this week, and we'll talk about that as well here in this video. So let's get into it. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comments section. So GME, I think it's important to understand a little bit with this name. Obviously, GME and AMC, they tend to be two different creatures, but the same beast overall. So when one of them does well, the other one tends to do well. When the other one does bad, the other tends to also do bad, especially on big catalysts like this. Trading like an AMC for GME earnings is kind of like, you know, trading a AMD to NVIDIA's earnings. AMD still rallied like 10% after NVIDIA's 25% gain. So they're not always the same as far as percentage wise. But if GME has good earnings, AMC will likely benefit from that. And vice versa. If GME has bad earnings, AMC might fall based off of GME earnings. Now, last earnings we got from GameStop, the stock had been selling off into earnings, and you rallied from about $15 up to $27, and then you kind of came back down to trade in between this $22 to $24 range for a while, and then you fell back down to about $18, and now you're back up to that $22 to $24 range heading into this next earnings that's going to be happening this week. Now, with GME earnings, last earnings was the first quarter of profits, a net profit, in about 2 years. So the stock did react very, very good. It rallied 35%. At one point intraday, the stock was up over 50% because they finally produced a profit. Now, this time around, investors are actually expecting GME to not be profitable. They're expecting GME to lose 12 cents per share. And if you take a look at some of the technicals on GME, the 200-day moving average is a very difficult level. 200-day moving average, you have not been above this since August of 2022. And last time you broke above the 200-day moving average with GME, the stock went up about 36.5%. So you will get a big rally if that happens. Now, just look at the nature of this 200-day moving average. You hit this back here in October of 2022, literally got rejected right around this level. Got rejected. Last earnings, right at the 200-day moving average. You got rejected just the other day at the 200-day moving average, and you've been getting rejected at this 200-day moving average for quite some time now. And really, it's been a level of resistance, a strong level of resistance. And you could see that all right here. Now, you also have this downtrending line that I have had drawn out here, and I think this is the best way to actually look at GME technicals. And the share price of GME, interestingly enough, this line's been on here for weeks now, is above this line, but below the 200-day moving average, with a tiny, tiny spread between the two, from $23.52 per share down to about $23.15 per share. It's holding this range for quite a few days now. And I think this is going to set us up for a very big move after GME earnings. Now, again, if GME is profitable, that's where I think things could get very aggressive with GameStop. And let's give you guys a rundown of the earnings preview here briefly. And then we'll go ahead and get into some of the other data as well and talk about where GME and AMC could ultimately go after GME's earnings. Now, they will report earnings Wednesday, May 31st after the bell. Wall Street expects GameStop to post a per share loss of 12 cents per share on revenue of 1.36 billion. This compares to the year ago quarter when the loss per share was 52 cents. on revenue of 1.38 billion. And if we go ahead and look really down here, it says the video game retailer has shown some solid fundamentals, demonstrating positive cash flow and an overall strong financial standing. The company last quarter reported a surprise profit even as it continued to struggle to grow revenue. What's more, U.S. video game sales fell last year over year for the second straight month in April. Overall, video game sales fell 5% to $4.12 billion in April compared to March's sales of $4.32 billion. As it stands, video game sales are down 2% on a year-to-date basis. Modest gains in console sales weren't enough to offset that decline. This trend, if it continues, is likely to impact GameStop's performance going forward. The company is projected to generate roughly $6 billion in revenue for the fiscal year. The gross margins, currently at around 25%, will need to move much higher in order to maintain profitability. To date, the management has done a solid job cutting costs. This will need to continue if the video game sales decline or continue to decline. However, the collectibles category has been a bright spot, with revenue rising 14% year over year in Q4. On Wednesday, GameStop will need to build on its Q4 success and show it is playing for keeps. So I think the bottom line to GameStop, if GameStop is profitable again, you're probably going up another 50%. Like that day of earnings on Wednesday, if they're profitable. 50% rally from here, going to put the stock at about $35 per share. And from there, what could happen? I mean, you got to look at the Ortex data. You got to look at these short interests and all of that, in which we'll do. But the stock could go much higher than that. And I think if GME were to rally 50%, AMC could do at least 20 to 25%. And that would put an AMC, let's go ahead and pull it up. That would put an AMC back to about $6 per share. So I think that would also be very, very big for AMC, because AMC has seen a lot of synthetic shorts, a lot of those market maker shorts that are really weighing on the stock right now. And it's kind of like a reverse gamma squeeze, where a gamma squeeze, market makers buy stock because people are buying calls. A reverse gamma squeeze is market makers shorting stock because people are buying puts. Now, these put positions that institutions and hedge funds are buying, they are millions of dollars worth. So some days you're seeing 20 to 40% of the volume being short on AMC by market makers, not by real institutional investors. What you've seen recently with AMC is actually the short interest drop by about 5% of the free flow, from 26% to 21%. And that's because they're just either there's good news coming and they didn't want to be short in AMC anymore, or they're just swapping these out for these synthetic short positions. And I think that's where, if GME does have good earnings, it could also send AMC stock up very dramatically. And just on that note of synthetic shares or synthetic shorts, what trades in regular hours? Well, options. What does not trade in after hours? Options. That's why AMC, even on the red days, tends to be red in regular trading, and then green in after hours, because there are no options that trade in after hours. So you get that more or less price discovery and real volume having an impact on the price of the stock. So after hours on Wednesday, you're not going to see options trading, but you will get GME earnings. And if GME earnings are good, that's going to send AMC stock higher. And market makers, they do go out and then they will buy stock in after hours, and they will drive up AMC. So it wouldn't surprise me to see AMC and GME actually have very strong days Wednesday if earnings are good. If they can just break even or get a profit, make a profit, you're going to be off to the races. If not, it's going to be a problem, and the stock might fall. Because, 1 quarter of profits, that is great, But if that's not followed by more quarters of profits, that's not as good, right? So if GME can do it, then it's going to be a very positive thing. Now, if we take a look at the short interest data for GME, live short interest of free float at 19.25%, 51.41 million shares that are currently sold short. In GameStop, cost to borrow fees, last we knew on Friday, cost to borrow average around 12%, cost to borrow max at 22%, cost to borrow minimum at about 10%. So numbers across the board, okay. They're not huge, but they definitely are okay. But if you do take a look at the overview of the short kind of thesis on GME, the short score is 89. $1.2 billion worth of short positions on AMC. Days to cover at 16. Days to cover being at 16 says it's going to be very hard for shorts to cover on their short positions, and the stock could rally exponentially if that is the case and GME does have positive earnings. You're also seeing 100% share utilization. So the numbers, look very good on GME to get a short squeeze after earnings. So that initial 50% or so pop that I think would come if GME does have a profit, that's not including a short squeeze. A short squeeze could last days or a week and send you up a lot higher than that. So I think that's important to define here in this video. Just the Wednesday move you get on GME, I don't think it's going to be the last move, right? That would likely fuel into a short squeeze. Now, if you take a look at the data behind AMC, roughly similar to GME's, about 21% short interest of free float, 109 million shares currently sold short. Cost to borrow average, last we knew at about 68%. Cost to borrow max 109%. Cost to borrow minimum, jeez, at 8.27%. Interactive Brokers has a 51% cost to borrow fee on 500,000 shares that are currently available to be lent out. But again, the option activity in AMC stock is where the action really is at. Those deep in the money puts, they are being targeted heavy by hedge funds and institutions. They're no longer shorting the stock. They're buying the deep in the money puts, and it just changes things a little bit, but it's still short interest. It's still market makers being short on AMC, and instead of hedge funds being short on AMC, they force the market makers to be short on AMC. And the beautiful thing about that is if the price of AMC stock goes up higher, market makers, they are non-discretionary. They will buy back the shorted shares of AMC a lot faster than a hedge fund would, because they're all about being neutral or, making money off being neutral. So when the time is right and the stock goes to the right places, market makers, their algorithms are going to buy back the stock. That's it. It's not a emotional game with hedge funds or institutions like, should I cover? Should I not? No, it's if it gets to this price, we're buying back these shares. If it gets to this price, we're buying back these shares. And I think that GME reporting earnings in Wednesday and after hours could really send AMC stock up quite a bit. If you take a look at the option activity, huge option activity around that June 16th and July 21st expiration. If you look at June 16th, that's the one I think we're most, not concerned with, but we're watching the most. You got about 340,000 puts in the money, 486,000 puts that are out of the money for that option expiration alone. For July 21st, you got almost 400,000 puts in the money and almost 500,000 puts that are out of the money. So some extreme option activity. And then if you look at the call side for June 16th, you got about 4,300 calls in the money, 453,000 calls that are out of the money. Some very big numbers here and not a lot of calls in the money. So on top of that, just market makers buying back stock. Think about it on the call side as well. Lots of activity here. You would have to see, a lot of shares being bought back as well on the call side. For July 21st, 3,300 calls in the money and almost 400,000 calls that are out of the money. Some extreme option activity that you are seeing, and I think GME earnings really is going to be the big focus of this week. As long as you don't get any bad news from the debt ceiling, as long as you don't get an update from the court proceedings that we're going through with AMC, some of these things, as long as nothing crazy happens, Wednesday is definitely going to be the big day for AMC and GME. As far as where AMC could go, if you do start this snowball-like effect, well, it's really hard to say. $10, $15, $20, $25 per share. I don't know. Anything's on the table here. You could go higher than that because of the degree of synthetic shorts that are on this stock. Same thing with GME as well. If you off the bat get a 50% rally to $35 per share, and then a short squeeze starts from there, you could easily be breaking out to $50, $60 per share. Relatively easy, as long as, again, there is a net profit for GME. So that's kind of going to do it here in this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.